Good morning, students. I am Mani Mehalai, Assistant Professor, PG and Research Department of Commerce, Arulmigu Palaniyandavar Arts College for Women, Palani. Today, in this class, we will discuss about the national income. First, know the national income. The aggregate economic performance of the whole economy is measured by the national income. In fact, national income data provide a summary statement of a country's aggregate economic activity. Modern economy is a money economy. The national income of the country is expressed in money terms. In real terms, national income is the flow of goods and service produced in an economy in a year or particular period of time. Next, the meaning of national income. National income measures the total value of goods and services produced within the economy during the course of a year. The labor and capital of a country acting its natural resources produce annually a certain amount of net aggregate of commodities, material and immaterial, including services of all kinds. The definition of national income is, in the words of Alfred Marshall, the labor and capital of the country acting in its natural resources and to produce annually a certain net aggregate of commodities, material and immaterial, including services of all kinds. This is the true net annual income. The next one is concept of national income. There are various concepts are used in national income. The first one is gross domestic product. It is shortly known as GDP. It is a key concept in the national income. Gross domestic product is the total market value at current prices of all final goods and services produced within a year by the factors of production located within a country. The labor and capital of the country working on its natural resources produce a certain aggregate of commodities, material and non-material every year. In addition to this, there may be foreign firms producing goods in the various sectors of the economy like mining, electricity, manufacturing, etc. The next concept is net national product. It is also known as NNP. Net national product or national income at market prices is the net market money value of all the final goods and services produced in a country during a year. It is found out by subtracting the amount of depreciation of the existing capital in a year from the market value of all final goods and services. If the depreciation charges are deducted from gross national product, the residual is called as net national income. The next one is gross national product. The gross national product is the total sum of goods produced in the country during a certain year or their market value. This concept includes agriculture and industrial goods as well as services like wheat, rice, cotton, cement and sugar, services rendered by doctors, teachers, advocates and labor, etc. The concept of gross national product is a comprehensive. It enables us to measure and analyze how to aggregate economic production of countries given in a period. The total money value of all final goods and services produced by the residents of a country in 1 year period. In the words of W.C. Peterson, gross national product may be defined as the current market value of final goods and services produced by the economy during an income period, regardless of whether the output is reduced. The next concept is personal income. The personal income is maybe also known as some factor of income. In other words, it is the income which individuals receive for doing productive work in the form of wages, rent, interest, and profits. Personal income, on the other hand, includes all income which is actually received by all individuals in a year. It includes income which is not directly earned but it is received by an individual. The next concept is disposal personal income. Disposal personal income is the amount which is actually at the disposal of households to spend as they like. It is the amount which is left with the household after paying personal taxes such as income tax, property tax, national insurance contribution, etc. The formula for calculating disposal personal income is disposal personal income equal to personal income minus personal taxes, or DPI equal to PI minus personal taxes. The concept of disposal personal income is very important for studying the consumption and saving behavior of the individuals. It is the amount which households can spend and save. Disposal income equal to consumption plus savings. The next we will discuss about the methods of measuring national income. In methods of measuring national income, there are various methods are followed. The first one is product method or value added method. The second one is the expenditure method. The third one is income method. The first one is product method. Goods and services are counted in gross domestic product at their market value. The product approach defines a nation's gross product as the market value of goods and services currently produced within a nation during a 1 year period of time. In the main sector who produce values added up: agriculture, manufacturing, construction, transport and communication, banking, administration and defense. There are various precautions for used in the product method, that is problem of double counting, value addition in particular year, stock appreciation, production of self consumption are used in the product method. The second one is income method. In income method, income approach is another alternative way of computing national income. This method is also called factor income method, factor share method, income distributor method, or national income by distributive shares method. This method to measure national income at the pass of distribution. There are 4 categories of payments are briefly described in the income approach. The first one is wages. It is the largest component of national income. It consists of wages and salary. The second one is rent. Rents are the income from property received by household. The third one is interest. Interest is the income which the private businesses pay to household who have lent the business money. The last factor is profit. Profits are normally divided into 2 categories, namely profits of incorporated business and profits of unincorporated business. The third method is expenditure method. The expenditure approach measures national income as total spending on final goods and services produced within nation during the year. The expenditure approach to measuring national income is to add up all expenditures made for final goods and services at current market price by households, firms and government during the year. The total aggregate final expenditure on final output is the sum of 4 broad categories of expenditure, which are as follows: consumption, investment, government and next export. Consumption expenditure is the largest component of national income. It includes all expenditure goods and services produced and sold to the final consumer during the year. Investment expenditure. Investment is the use of today's resources to expand tomorrow production or consumption. The third one is government expenditure. It is the second largest component of national income. It includes all government expenditure on currently produced goods and services but excludes transfer payments while computing national income. The last one is net export, X minus M. Net exports are defined as total export minus total imports. The next topic is importance of national income. Note the production, performance and achievements and indicate the living standards of the people to know whether a country is growing or declines. Show the contribution made by the various sectors to national income. Know the purchasing power of money. Contains figures of consumption, savings, investment, imports and export. Know relative roles played by public and private sector. And last importance is valuable guide to formulate economic policies. The changes in measuring income, it includes non-availability of data, absence of trained personnel, absence of proper records, existence of non-monetary sector, absence of occupational specialization, problem of double counting, existence of illegal earnings, and the last one is coverage of commodities and services. In this class, we have discussed national income meaning, definition, methods and measuring of national income, importance and challenges. Thank you.